Budgeting. By the end of this topic, you should be able to define the terms budgeting and budgetary control, identify the purpose of budgeting, and calculate budget variances. All of these are critical aspects when this topic of business comes up. First, let's take a look at what actually is a budget. Okay, let's start by thinking about your own budget. Get a piece of paper and write down what your typical inflows are. So let's do it monthly and write down what your typical inflows are each month. Well, how much money do you typically get? Where does that money typically come from? And then underneath that, maybe write down what your typical expenditures are, your typical outflows are each month. How much you typically spend on each month. You may want to pause the video now while you think about this. Okay, let's take a look at my budget. So let's imagine that my wage each month is £2,000. I get interest. Now that's money from the bank who pay me when I save my money, remember, so interest payments are £60. And my family give me £200 each month. Of course I've got my car, which I have to pay for, which is £200 a month. My mortgage, which is £550 a month. Bills, which are £250 a month. Food, which is £300 a month. And my mobile phone bill is £10 a month. And they're all my expenditure. So you can see straight away that I've got an inflow, I've got an outflow. So what does all that mean? Typically I have inflows of £2,260. I also have a total outflows of £1,310. And if that's my budget, so I plan for those inflows and I plan for those outflows, at the end of every month I know that in my bank account I should have £950 left over, which I can then choose to spend as I wish. I may then budget for this. And that is what a budget is. Think logically when you see the word budget. A budget is a plan, and that's the key word, a plan, of the revenue and expenditure of a business over a period of time. If you want to think about the use of the term budget, you may see it on computer games. Lots of people will play these football manager games where you'll be given a budget. It's the same in football clubs. They have a budget to spend on players. It's a plan of how much they want to spend on bringing in new players. And they may also have a budget for how much they anticipate coming in, and that's the revenue. And that's what a budget is. The key thing is it's a plan of the revenue and expenditure of a business over a period of time. Believe it or not, we have two types of budget. We have a revenue budget, and remember, revenue is all the money that goes into the business, and because it's a budget, it's a plan. So a revenue budget is a plan of all the inflows of money in a period of time. And guess what? We have the opposite. We have an expenditure budget. An expenditure budget, strangely enough, is a plan of all the outflows of money in a business over a period of time. So it's a plan of where you're going to spend money and where money's going out. Remember, expenditure is always a cost, so it's where money is going out of the business. And again, it's a plan. The key word is, remember, a budget is a plan of money going out. Let's take a look at a worked example so you can see these in action. So a business might have a typical revenue budget of the sales revenue is £6,000, and it's got interest payments on the money that it's got saved in the bank of £5,000, and that would be the revenue budget, or the income budget if you want to think of it in that sense. And then of course you've got your expenditure budget, where you've got your rent of £1,000, your utilities of £1,500, your wages of £2,000, and your cost of sales of £1,000. And that's your expenditure budget, money getting out of your business. So think about your cash flow, but it's a budget, it's a plan. This is what we plan to come into our business, and it's what we plan to spend. And if you notice, that gives us a planned budgeted profit of £1,000 at the end of each month for our business, which is quite good, as you probably can work out. So what does a budget actually tell us? Well, a budget typically can be used to set targets and plan for the future. So for example, when we've done our budget, we can see, is our sales target realistic, or do we need to increase our sales? What sales figure do we need to achieve? Do we need to reduce our costs? By what percent? So again, we can look at our cost basis and we can think about, can we reduce it? Do we need to arrange credit from our suppliers? Again, all these things are things we can look at when we're planning out our budget. We've got the data in front of us. And of course, we could get the data from previous years. So you set your budget and you plan for your inflows and outflows as part of your budget. However, it doesn't all stop there, because we now need to see, how well is your business performing according to the actual targets and the budget that you set? And this is where the other key term comes in this presentation. Budgetary control. Budgetary control is the checking of the budget against the actual performance of the business. This is one of the key words that people tend to get wrong. So you've got to remember that budgetary control is when you actually check against the performance of the data you've got in your budget. So that's budgetary control, checking against the actual performance and the data that you've got in your budget. That's a checking. So budgetary control is a constant checking. Now budgetary control, as you can quite imagine, now what we've got to do is we've got to calculate this thing called variance, and that's a typical word that appears when we see the word budgetary control. Now as you can see on my so-called table here, I have the budgeted figure for January, February and March. I have the actual figure. Let's assume that this is the overall figure for the budget. So this is the profit, basically, not an income, a revenue budget, and not an expenditure budget. This is the profitability. So as you can see in the case here, in January I budgeted to spend £5,000 or to make £5,000 in profit, and I've actually made £7,000 in profit. That means that I've got a £2,000 positive, or what they call a favourable variance. So it's favourable, it's in my favour. I've done better by £2,000. In February, however, I budgeted to actually make a profit of £6,000, but I actually only made a profit of £5,000. I've done worse. Now notice I put it in brackets. I'm using my same policy of negatives in brackets of minus £1,000. Now because I've done worse than expected, that's called adverse. I've done worse, adverse, worse than expected. Well, in March, again, I planned my budget to make £7,000 profit, but I actually made £10,000 profit. So I've done better by £3,000. That's a favourable budget, so it's in my favour. I've done better by £3,000. And that is how it works. That's actually doing effectively what we call budgetary control. I'm looking at my data, I'm comparing it, and I'm going to do something about it. And what I do about it will be part of my budgetary control. So in the case of February, where I've done worse, I might look to try and increase my revenue sources. Maybe I'll hold a sale. So I might take my price down by a small amount, hoping that I'm going to increase the number of transactions by a greater amount than what it's going to cost me. And that comes into elasticity of demand, which you've probably done before. Of course, I might look to try and reduce my costs in that month. That would be a more obvious one. Or I might even try, if I was doing that, to try and raise creditors of my suppliers. So that would be my budgetary control, trying to respond to what I see already. So let's look at those keywords in more detail. Adverse and favourable. Now remember, adverse means worse than expected. Have we done worse than expected? Favourable means, have we done better than expected? It's quite simple as that. So if we think about adverse weather, that's really bad weather, adverse weather. So worse than I planned in my budget. Favourable is obviously better than planned, and quite simple as that. And that's how you talk about the variance. The best way is to give you a go at trying to calculate the variance and have a look at how budgetary control can be done in real life. So if you see the table here, what we'll do in this table is we'll assume that it's an expenditure budget, so it's money going out of the business. What I'd like to do is try and calculate the variance for the business. Now remember, it's the expenditure budget, so the business planned to spend £2,000 in January. They actually spent £1,000. So you've got to think, are they better or are they worse? So that's favourable or adverse, and by how much? And then go to the rest of the table. You may want to pause the video while you just fill in that table or jot it down on a piece of paper. I'll run through the answers with you in a moment. Okay, as you can see here, the answers. So remember what I said, it was an expenditure budget. So we're looking at whether it's favourable or adverse, depending on being the expenditure budget. So in January, the business planned to spend £2,000, but it only spent £1,000. So actually, that's better than planned. That's favourable by £1,000 because they didn't spend as much money as they planned. In February, they planned to spend £4,000, but they only spent £3,000, which again means it's a £1,000 favourable variance. Whereas in March, they planned to spend £2,000, but they actually spent £4,000, which gives us a £2,000 adverse variance, as that's worse than expected. Now, of course, that's worked out the variance and the difference, but budgetary control is about doing something about it. So what can we do? Well, how can we monitor and how can we adapt to ensure that that wasn't going to happen? And remember, that's the key word you've got to keep in your mind. Budgetary control is about the adaptation, the managing and the comparing of the data in the budget and the plan as you go along. So just don't ignore it. Okay, that's it. You should now be able to understand the purpose of budgeting and have an understanding of the term budget and budgetary control, and hopefully be able to calculate variances. Don't forget, you can follow me on Twitter. It's at BeeBusinessBee. You can subscribe to my YouTube channel. It's youtube.com/BeeBusinessBee. Also on Facebook, it's facebook.com/BeeBusinessBee. And remember that there are full resources, quizzes and tests alike on BeeBusinessBee.co.uk. Make sure you check out the website. Until next time, I'll see you then.